Do this before it's too late. I'm your host, Steve Van Metre, and thanks for joining me today. And investors are making a huge mistake, and it's not too late to fix it. Let's over to Goldman, where we picked today's story up. With the tactical flow of funds, they're saying there's 27 and a half days left to trade in 2022, and risk remains to the upside into year end. And this is a case that we've been making over the last couple of weeks. And some of you are saying, well, how can you be so bullish in this market? Well, there's a reason why. Is a lot of people don't understand the market structure here. They don't get it. And I want to go over this before we get into the rest of the show, because it'll make a lot of sense when you understand just how the market is structured right now and why it's different than the way we went into the great financial crisis. So I want to pull up this chart here and start the show out with the VIX. Now, this is a volatility index, and we've noted that every time it gets into this 31 to 36 range, vol sellers, people who want to short volatility, have shown up. And we saw this back in October. Kind of in the middle of October, vol sellers came in and they've been bringing volatility down. And you note this trend continues to fall. Now, the reason we see the market get bullish isn't just because the relationship as volatility falls, stocks tend to rise. It's because there's a lot of products out in the market that are called vol control or volatility suppression strategies, meaning as volatility falls, they buy stocks. Now, what happens then if volatility continues to fall enough and stock prices go up enough, then what happens is you see the momentum machines, the CTAs, the quants, the systematic machines start to short cover, and then they drive stocks higher. And then what happens, institutional money comes in, and then retail money tends to come in. So the reason I'm bullish here is because when we understand the machine positioning and what's going on with these vol suppression strategies, it makes a case of how we can get an actual melt up, even in the case the economic data is getting worse. All right, let's continue on with the Goldman theme to start out as we get into the positioning of how the machines are sitting. We note that there was 2.1 trillion index of options expirations. That was on Friday, and a lot of those positions were bets on the downside of the market. So those have been cleared out, creating some up room of headwind now for the market to move higher. Goldman also notes that corporate buybacks are running double the model pace ahead of, again, the 1% tax that goes into effect at the end of this year. And so this is something that's kind of interesting to me because, in the past, we've kind of seen buybacks pretty much washing new issuance from companies. Of course, they're giving stocks to their employees. Now we're seeing the pace double, suggesting they're buying more stock back than they're issuing. And that's a key point. Let's go on and see now. They're looking at what Goldman shows in terms of their systematic equity buying. And we're going to get into the bonds here in a bit. The number is even bigger on the bond side. And again, this comes back to our lead of the mistake investors are making. But look at this. Just next week, if the tape is flat, if stocks don't move, if they just go sideways, that there's going to be $20 billion in buying, at least from Goldman's estimates, across all the major markets. If you see the big move in the equity market, it's not going to actually drive these systematic machines to do a whole lot in terms they're only now 27 billion. But if there's a 2 standard deviation move, look for that number to go up to 52 billion. So if we see a big move in the market, it's going to get backed up by the machines a bit, but not in a huge way. That will eventually come. We're not at the trigger points yet. Goldman also notes that month-end pension, well, we talked about how month-end pensions leads to selling. Now they're saying, look, they're fully funded. They're not going to be selling at all. We head over to Nomura. We note that their equity setup, they're very short on their side, and their short coverage will come soon enough. Same thing with TD Securities. Again, not to be confused with TD Ameritrade. They're sitting short as well, and that puts the trigger point. So here's what you should be looking for is if we see the S&P 500 move over 4,000 and then some, what you're going to see from that point higher is another round of short covering. Again, you should take away from this is the machines are very short, and then as they short cover, we think longer term here, perhaps even into later in December or into early in 2023, these machines could flip to the positive side. And what could be the catalyst for that? Could be the Fed pausing, could be the Fed, backing off their 75 basis point rate hikes. What we should be thinking here going forward is what's going to change this fall structure, because if volatility continues to fall in the next week and we hit these trigger points of the S&P over 4,000, then guess what's going to happen? You're going to see volatility go down even more and the market rise. All right, let's continue on and look at the momentum positioning, because when you understand the U.S. equity market is just a giant momentum trade, it's a giant short vol trade. That's why I like to talk about momentum. You see the RSI is over 40. That's good. MACD, it's got a positive cross. Momentum Timer Pro adding in another signal, has 24 consecutive daily buy signals. And we kind of said last week, if a certain condition happens, you should buy. Bought it open back at 11.8 at 381.11. Friday closing at 396.03. I still think this goes higher. I think it goes a lot higher, but the next upside target is around 410, 411. Downside target remain at 385. If you're holding off and want a better signal, wait till this 3-month window goes from sell bin to sell buy. And by the way, we put out our Black Friday special early. It's back to the half off and half off lifetime only on the monthly. There's no more annual. So go to the Markets Insider Pro. It's a 30-day trial. So if you don't like it, let us know before the 30 days is up. We'll fund you back. No big deal. Now let's take a look at the charts here for SPY. Because, you see if these machines start to trigger, you get that melt up, and that's what makes this interesting. You see, look what happened as we moved between supply zones. We rallied up, it got above the supply zone, came back and found some sellers. And we'll note that those last few days, kind of going into Friday of the market, people were kind of like, aha, melt up canceled. Look how wrong you are. But really look at the fact that it came back into a supply zone and found buyers, broke above the 6-month volume profile line and closed there, setting up some upside move. I suspect it'll have a little bit of a run in at the 200-day moving average or thereabouts above it. Notice the volume here on the profile is right above the 200-day moving average. 200-day is acted as a kind of area of resistance. I would not be surprised it gets hit there, but notably, look what happens. If you get above the 200-day moving average, guess what? You're over that 4,000 plus mark. You start to see the CTA short covering a bit, and that could, boom, put the markets higher, maybe one last round of selling before there's a switch there. All right, let's take a look at the QQQ. Because tech, I think, has even more upside than the S&P. Momentum here positive. RSI is at 56. That's good. Again, above 40. Positive cross on the MACD. Momentum Timer Pro, 6 consecutive daily buy signals. I noted I think last Sunday that if we had a daily flip to a buy, to buy that, it occurred on 11/11 at 382.56. Now Friday's closing through 284.82. Upside target, and again, I think this is a lot higher, but at least in the interim, 297 to 298. Downside target just below at 280. If you're waiting on this, you can wait till this 3-month window goes to say a sell minimum or a buy minimum, and then take a position. Then let's look at the charts, because I think there's some very interesting things here too going on. We notice we found buyers down here. They're kind of maybe a double bottom going on, a rally through the 21-day moving average, a rally through the 50-day moving average. We should now see the 50-day start to flatten out, and look where it got rejected at the 1-year volume profile line, right in that supply zone. Gets rejected down to another supply zone, finds buyers, and is now got, had a little selling there into Friday, but still a definitely nice upward trajectory now starting to build. You break through this 1-year volume profile line, and I think you've got liftoff, because look what's right below it, the 6-month volume profile. And what does that tell us? Is there's all these are people down here are buying. You get some machine boost following the S&P, and you get that uplift in the market. So again, if this rallies and it breaks through that 1-year volume profile line up here, and you're not looking at this, you should look to add a position and start building into a rally for sure. All right, let's take a look at the bond market, because this is equally interesting. And Goldman notes, perhaps even more interesting, what they note here is that if the tape is flat, and I want you to see 2-year, 5-year, 10-year, we're not talking T-bills, we're not talking short-term, we're talking intermediate and long-term, particularly if you're looking at the 2-10s yield curve. Note there's $8 billion of buying just on 2 years. You look at the 10s, there's $2.8 billion in buying. If the tape is flat, if bond prices just start going sideways, they're buying a whopping $34.5 billion of government bonds across the table. You see over the next month, if its tape is flat, it's buying 82 billion. That's huge, or almost 83. If you see a move higher in bonds, look for that number to jump to 171. You see a big move in bonds. How about Metre? Well, they're not making any moves yet. How about TD Security? Nope, not either. Where is the line in the sand you should be watching? Look at the 10-year Treasury yield. If it falls below 3.1%, that's where you're going to see a bigger move in bond prices as the machines start to pick up and catch in. So check your charts on that. Now let's take a look at TLT. And what do we know on TLT? Momentum remains positive. Still got some work to do, obviously, before it gets to that CTA trigger point. How about the RSI to 54? MACD has a positive cross. Momentum time improved 6 consecutive days of buy signals. I noted last week, if you're a dip buyer, what to look for. I still would say if you're a trader, hold off on this. Wait until the 1 month flips to a buy minimum. So keep an eye on this 1 month signal. Next upside target. We noted last week, and I wanted to leave this here because I said the 50-day moving average, looking for rejection here. Guess what happened? It got there, got rejected. Now we'll add on, then a pullback before a second attempt at the 50-day. If the second attempt breaks, look to buy. Downside target sitting at 97. Let's take a look at the chart here and see what we got for TLT. And what do we note here? There's that 50-day, got rallied right up to it, got rejected. Again, I expect a pullback. Now, it may not, because, Goldman knows there's going to be some buying across government bonds, but I still am going to expect sellers here. Expect a bit of a pullback to catch that 21-day moving average on the rise up, break the 50-day the second time, start to take positions in there. That's usually a very positive sign. In terms of the machines returning, well, you see this volume profile line, a 6-month window up here around 114. That's where you got to break to see the short covering of the machines. And then you're looking at a liftoff case there. So what did we talk about this mistake at the lead of the show that investors are making? Is they're sitting on too much cash. So I want to make the case that both stocks and bonds can rally here. So I'm not suggesting you go all in on stocks or all in on bonds, but maybe a mix. Look at where your risk level is. Look at whether the machines are coming and say, hey, do you want to sit on cash and perhaps miss out as the market moves higher, whether again it's in stocks or bonds, and then you find yourself playing catch up as the market then peaks and the economic data catches up into early next year. That's the mistake investors are going to make, is missing out on this move that's potentially coming. Let's talk about gold because, wow, Metre gave us some touch on gold. They normally don't. They're still fairly short that and looking to move higher. I'll give you kind of a range of where that should be. TD Securities, the same case here. Now, gold, these are, look at this. When it gets over 1785, that's where you're going to start to see another round of short covering start to show up. And so you'll kind of note that I've been bullish a bit on gold, and there's a good reason for that. In fact, last week we talked about Zacatecas silver stock, and I just want to be on the record. Yes, I did buy it the following morning. I took a nice position, and when you understand why I've been kind of talking about miners to the subscriber list, why this is interesting, because when you see these machine positioning, and again, I'm not suggesting you do the trade or follow me or do any of that. What I want to suggest to you is if you see these machines on the equity side start to trigger, and then you see the gold short start to trigger, what's going to happen? You're going to see gold prices go up. You're going to see the mining stocks go up, and that gets me pretty excited because, yes, you can see cases where yields fall and golds go up. All right, let's take a look at GLD, RSI 61, MACD, positive cross, 10 consecutive buy signals, no position, but you can see it close on gold over 1785. You might as well throw in a piece on GLD and ride the rally. How about next upside target? I'm going to note 200-day moving average. My target on that's unchanged. They do expect rejection there. Downside a little bit below. Let's take a look at the charts here and see what's going on. And where's gold? There it is. So we see this nice rally here, this gap up. Wouldn't surprise me if this thing comes all the way back down before and hits the 6-month volume profile window. Also would not surprise me if we get a run up to the 200-day and get rejected there. The 200-day has acted as a little bit of resistance. You see kind of in a downtrend, but once it breaks it, and this thing goes hard, again, you start to see that short covering of the machines. So let's take a look at miners, because we've got GDX here. Again, miners are just a leverage play on the metal. So if you really think gold's going to rise, take a look at the miners. Momentum is positive. The RSI is at 60. You got a positive cross on the MACD. 10 consecutive daily buy signals. Last week, I said you should buy this and just add as the price goes higher. I didn't give you a price level to buy. Just say, hey, take a position. If price goes up, goes higher, I'll make the case, because I made that case to the subscriber list of why they should do that. Next upside target is the 200-day moving average, downside at 25. Let's take a look here and see what's going on with GDX. And of course, it would help if I could find it. There it is. And look at this. And this is really cool. This is kind of what you want to see. You see a bottom forming here, but notably, look. So price came down, rallied into a zone. This will be in the sell zone right at the moment. Sellers came down into a buy zone. You see a rally back down into a buy zone, rallied back down into a buy zone, rallied back down into a buy zone. Look, 1, 2, 3, 4 zone. People buying every one of these dips. That should give you a clue that there is some support here. Now we go back up. This rallied through and screamed through the supply zone. Now, could we get a sell down into, say, around 2486 range in here, maybe like a inverse head and shoulders, or like a head and shoulders bottom? Sure, we could. But notably, look, price rallied up here, sellers came back and drove it down to the supply zone, and now look, we see a flip here. And that's what gets me kind of really bullish on this. You could see a rally up into the 200-day moving average where the volume starts to pick up, potential rejection. And then kind of my case for this is we're really looking at the potential of kind of an everything rally. And this all comes back again to machine positioning. As they go from short cover those positions and move into long, you see it across the equity space, the bond space, the metal space. It makes a real case for the bull case here. And I think a lot of investors are going to wonder how the market can rally against declining economic data. It's simple. The U.S. equity market's just a momentum trade. Machines don't care about the data, don't care about the Fed. They care about price level. And with that, I'm Steve Van Metre. Thanks for watching. Thanks for being fans. Bye now.